What's up, everyone, and welcome back to the Doug Polk podcast. My name is Doug Polk, and today we are joined by a voice of reason in the cryptocurrency world, Ari Paul. Welcome to the pod, man.
Thanks so much, Doug.
So this is a pod I've wanted to do for a little while. I've reached out to you a couple times, and I'm glad that we finally made it happen.
Yeah, me too. As I was just commenting, I feel like you and I kind of play somewhat similar roles as trying to be kind of public educators. For people who just joined, something Doug and I just chatted about for 10 seconds before going live was we're both kind of willing to piss people off, and if we think it's the right thing to do, and make some enemies, not deliberately, but just when it's the right thing to do. So when I only saw your first YouTube video a few weeks ago, but definitely was looking forward to chatting.
Yeah, so I mean, obviously, I'm on the same side of the fence as you there. I've always felt compelled to try and do the right thing for kind of the community, or what I feel like is the right way to behave. We've got so many people that try and take advantage of the power that they have. Somewhat in poker, but definitely as well in cryptocurrency, that I do feel compelled to sometimes talk about it. And also, it makes for good material a lot of the time. So it's kind of a win-win there when you get to do that. So, I think the best example was. We have so many topics today, but let's start off and talk about like the huge run up that happened in December and January this year into last year. When I look at what happened from at least like a YouTube front there, it was absolute madness where I saw all of these complete shills just like promoting just outright scams on YouTube and running up big audiences. And so some of my first cryptocurrency content, I always try to be honest with my audience, which is like, I'm not an expert. I'm definitely not a developer. I like cryptocurrency. I like learning about it, but I'm not an expert. But what I can do is warn people about some scams. And there were a ton of those that came up in the run-up. What were your thoughts during the mania phase that occurred in December and January?
It was so in some ways predictable, and like crypto follows the same cycle, which is like you take all of the manias and panics in human history and you just exaggerate them. So like I think it's not that different from the tech boom. It's just so like, why is it so stronger? Why is it so much more exaggerated? Well, one, there's like no fundamentals at all. We just have no idea. Like, so when you have something that like you've had people on your show who say Ethereum's a scam, right? Like everything's a scam other than Bitcoin. And there's a lot of, and I disagree with that assessment, but you do get this whole spectrum. So like there are probably some projects that I think are fundamentally worth zero that smart people might disagree with me, right? There's so many unclear questions, right? Whereas with an equity, if like a tech stock is overvalued, okay, it's trading at a 400 price to earnings ratio, but like there's only so crazy it can get. Like at some point, pets.com, it's like, even if pets.com like sold every person in the world pet food over the internet, they're still not worth what they're worth, right? Whereas in crypto, it's like we can dream, right? Maybe EOS or Ethereum or Cardano will be $1 trillion world changing protocol. And it's really hard. There's no like objective facts to disprove that clearly. So that supports people's kind of hopium, right? And then the fact that this is complicated, right? There's like no one really qualified to invest in cryptocurrency. Like I would say that it's funny. I've occasionally tweeted that I'm really bad at technical analysis, and I've had people be like, "What the hell are you doing as a professional trader if you're not good at technical?" It's like, well, trading cryptocurrency and investing in it is topography, blockchain engineering, game theory, behavioral finance, like venture, early stage tech investing. Like it's all of this stuff, right? And I'm kind of not good at any of it. I think I'm like D level at some of it, maybe B level at others. But because of that, there's like no one qualified. And so everyone is really reliant on expert opinion, more so than they would normally be. And this is true also of like venture capitalists, family offices. If you're a professional investor in an endowment or a pension, and you're trying to think, how do I invest in the space? Like, good luck, right? Like this is a question I get asked a lot. Like someone will say, look, I really want to dive into the weeds. I really want to know how to invest. I'll give you a specific example that I think you'll like in terms of on the theme of like making enemies or calling out bad actors. So there's a family office that is has $10 billion and are very, the lead investor who was going to look into crypto spent 6 months, did deep dives, could talk to you about proof of work versus proof of stake. Very sophisticated, at least as of 6 months ago. Like not many traditional investors kind of got to her level of expertise. And she asked me, hey, Ari, we're thinking of like buying IOTA directly, just like actually holding IOTA. What do you think about IOTA? And I said, see, and she's like, and it just rallied a lot last week. And I said, so the network broke. Like it actually, this was like, I think it was in around mid-November. I may be off. The network actually went down completely for 3 days because IOTA is run on one computer. This is a simple fact. I think it's called the coordinator, the controller. It's in a bunker somewhere. And for 3 days, that one computer was down. And so the IOTA network ceased to function entirely. But no one knew this. Even the people who were IOTA holders, even the 0.001% of the world that invested in IOTA, studied IOTA, read the IOTA white paper, they were unaware the IOTA network didn't work. So what happened was people were buying IOTA on exchange because the IOTA team was issuing positive press announcements. But people who had IOTA couldn't sell it because they couldn't transfer it to exchanges because the network didn't exist. And so here's a woman who's done her work. She read the white paper. She's done the research. She talked to experts. She was unaware the network was down and unaware that this was not something she should be investing in. So it's really, and because of that, when a self-proclaimed expert gets on YouTube or gets on a podcast or Twitter and says, "Hey guys, I know what I'm talking about. I'm going to throw out some jargon," and the average person can't evaluate. If I could spout nonsense for 60 seconds and half the world would think I was a genius, right? In crypto, because there's so few people who can call BS that everyone relies much more heavily on experts than we would in most areas.
Well, IOTA is an interesting example because I think IOTA specifically, there were enough experts who all came out and said, "Guys, be careful here." I saw many people warn people about that one. One of my favorite YouTube bits in crypto is Richard Hart going off about IOTA. He has this he just talks about IOTA for 5 minutes, and it's like he's just on insane tilt the entire time about like the wallet and like all of the stupid decisions that were made. So like with that one, I actually think. And I like what you're saying here about like, experts and what expert opinions are and how that should sort of, how much of a role that plays in terms of what the community decides to do. But you kind of have to go off of expert opinions, at least to some level, because if you're not a developer, then what is your opinion on the code going to mean? It means nothing. You need somebody who actually knows what's going on to say something. And that's why I always find it funny when people get really upset, like, "Oh, this guy's spreading FUD." Like, it's like, no, this guy's a developer and he's warning you. Like, they're like, "Oh, well, he works for Monero or he's part of Blockstream." Or it's like, I don't understand why people, and maybe this is a good question. Why do people feel like they know better than developers or people who are actually studying? Like, what makes people feel like they're smarter than them and know better and kind of go against the grain there? That's something that I've never really fully understood. Why people go against the grain, against expert opinions when they clearly know less than these people do.
Yeah. So first, totally agree. I rely extremely heavily on expert opinion. I'm not a cryptographer. I'm not an engineer. I don't pretend to be. If I make a technical claim, it's because 10 top world-class experts told me that. And they might be wrong, but a lot of what I do is actually try to figure out who to trust. And you have to read between the lines. So like Greg Maxwell, who's a Bitcoin Core developer, is one of the smartest guys on the planet. There's probably 100 people in the world who can follow the cutting edge work he's doing on Bitcoin protocol. But if he says proof of stake will never, ever work, period, and I've debunked it and disproven it, you have to take it with a grain of salt because he is biased. So in no way he is so much smarter than me and knows so much more than I do in every possible way, but you still have to adjust for bias, right? You still have to recognize, okay, this guy does have a vested interest. He has a philosophical belief, a massive economic interest. Like, I don't necessarily take every expert's opinion at exactly face value. So for me, it's triangulation. I want to talk to the top Ethereum devs, the top Bitcoin devs, the top Monero devs, and I try to triangulate. And I always try to figure out who is an expert, who is an incentive to disagree. So if I'm trying to get so I'm friends with some of the Monero team. I'm a big philosophically aligned with what they're doing. But I know they're biased, right? I know they're going to tell me good things about Ring CT and Crypto Node, and actually they're very honest about the failings, frankly. But I'm going to try to triangulate. So I'm going to reach out to top experts at Zcash or Zcoin or in terms of why people ignore the experts. One is I think there's a little bit, I don't know, there's a cultural element. So especially now with the rise of Trump, there's this like post-fact world where it's very fashionable to say the experts are idiots or the experts are often wrong. And of course the experts are often wrong, but they're right more than you. So like, yes, doctors are wrong all the time. That doesn't mean I should self-diagnose because yes, even if the doctor's right, they're still going to be right more than I am, right?
Right.
So I think those are the big things. And then it comes down to economic incentives. So if you own a ton of IOTA, you are going to fool yourself. You're going to find a way. You're going to, you're going to ignore any contrary evidence because you have to.
But the thing is, and this is maybe coming from a poker background, which I actually want to talk to you a little bit about too, because I know you played some poker as well. But coming from a poker background, I don't feel any loyalty to my strategy in investing. I don't feel like, oh, I've decided this is what I'm going to invest in. It's these coins or bust, baby. And then I just like plug my ears and just like sing songs until I'm rich. There's no need to do that. Like one of the great things here is that there's so much information happening in cryptocurrency, so many people with opinions, so much to learn. So like every day, the amount of news is just, it's insane. And so you can constantly evaluate your positions and decide if you like those positions and then change based around that. You don't have to just like go all in on one coin and then never listen to anything again. And in fact, like you shouldn't do that. I mean, that's not really a groundbreaking thing to say, but so I guess like it's just weird to me when I see these people who have loyalty. I am loyal to my coin. It's like, guys, it's not a religion. It's an investment, or whatever you think it is.
It's funny. So I half agree. So objectively, as an investor trader, of course I agree. And I think as a poker player, one of the first things you learn is it's a game of incomplete information that you update based on new information. So if you and I can give the odds of being dealt pocket. If we're playing heads up and I'm dealt pocket kings, it's easy to calculate the odds I have the best hand. But if I bet and you raise and I re-raise and you raise me all in, the odds are lower, right? I don't know. Right. I don't know quite how conservative you are, but there's some players where I would fold pocket kings, right? My odds of having the best hand went from whatever 220 to 10%, or I mean 1 in 220, right? So there is an element of a lot of people don't think that way. A lot of there are people who are way smarter than me who are terrible at trading and poker because they're trained that you find the right equation, you find the right data, you plug it in, you get the right answer, and then they're very stubborn. They have faith in their model, right? Whereas I think you and I as poker players, it's like, I don't trust anything, right? I'm constantly ready to throw away my cards. I'm constantly ready to update my information based on what my opponent's telling me. And markets are like training as a trader. I worked at Susquehanna International Group. It was founded by poker players, and we actually spent 100 hours playing poker as part of our training program because they felt that trading was so similar. Basically, they were hiring these 23-year-old idiots who didn't know anything and then having them trade hundreds of millions of dollars. And it was all about knowing what you don't know. It was all about handicapping the limitations, because there's always someone who knows more than you. However good your hand is, unless it's aces pre-flop, there's always someone who might have a better hand, however good yours was a priori. So you and I know that a lot of people think very much this is a search for truth, kind of in an absolute sense. So they say, I figured it out. Proof of work is the thing, period. And then they're like, that is now a belief. It's a core belief for them. The other thing is money is a religion. So, it's a shared delusion, I don't know who came up with it, but like Naval Ravikant, Nick Szabo are very fond of kind of saying these things, which I think are accurate, which is ultimately money is based on faith, all money, whether it's gold or everything. Also, Bitcoin was born out of almost a religious fervor or political fervor. So we are creating sound money to undermine central banks, possibly even to undermine central governments. And here's a fun thought experiment. I know some people who bought Bitcoin when it was 10 cents or mined it before that, who never sold. What kind of person who has 50 grand in the bank or less sees their wealth in Bitcoin grow 1 million, 5 million, 10 million, 100 million, and never rebalances and never sells? It's someone who has
a crazy person is the answer to that.
A crazy and a religious person, a person who has blind faith that this must succeed, but also who needs it to succeed, who views their hodling as a vote, as being part of almost we are going to change the world, and the way we're going to do it is by hodling Bitcoin, and that forces the price to go up because there's no supply. Basically, we're limiting supply, and that is going to undermine the global financial system and potentially the global political system, and they wanted that to happen. So there is this religious element to people who think that they are participating in changing the world, and I am empathetic. So as an investor and a trader, I try to separate that entirely. But that's part of what brought me into crypto. I do think cryptocurrency is world changing. I do think it is there's plenty of social evils, but there's some social good. I am a believer in how it's going to transform the world. I just try very hard to separate that from my portfolio.
Well, that's a smart play, I think. But so let's kind of change gears a little bit in the conversation. So on the podcast, if you guys have been checking out the podcast, which I hope you have been, we've had a lot of Bitcoin maximalists on lately. And by all means, at least my personal view, I view Bitcoin as what is the strongest cryptocurrency and also the one with the best future on average. But what are your thoughts in terms of altcoins? Do you invest in altcoins? What are your thoughts on Bitcoin dominance right now? Can you just talk on that subject in general?
Yeah, sure. Okay, a lot to cover. So first, I think cryptocurrency is a really bad term. There are crypto assets that serve totally different functions. So I've invested in tokenized equity that is equity. It's equity in the state of Delaware. It is governance rights, dividend rights. There's a company. It's totally centralized. So someone's like, oh, that's a shitcoin. It's centralized. Like, It's a company. It's not trying to be Bitcoin, right? It just happens to be tokenized, which means maybe we get liquidity sooner, maybe there's lower friction. Then you have, I think of Bitcoin as a crypto commodity. I think of it as digital gold, Swiss bank in your pocket. Obviously, Craig Wright would disagree with me on what it's trying to be, but and then you have things that are applications. You have things that are semi-centralized that might make sense. I do buy the difference between sovereign grade resistance and platform grade. So the discussion around EOS is probably not sovereign grade resistant. A government can or a coordination of governments can probably shut it down. So therefore, is it worthless? And the argument is, well, maybe not, because right now there are a lot of companies that are entirely dependent on Amazon Cloud or dependent on, like if you were if you were Zynga developing on Facebook, you didn't necessarily want to be immune from the American government, but you didn't want Facebook to be able to shut you down. So the idea of EOS was kind of like, maybe we're not sovereign grade resistant. We can't protect you from censorship against countries, but we can prevent one company from censoring you. Is there value there? Are there trade-offs? So I think there are a lot of different use cases for crypto that are truly non-competitive, that I think there's a spectrum of decentralization to serve different use cases. I also think humans are community-oriented beasts. Like, brand matters. You can work out alone in your home gym, or you can go CrossFit or do Race for the Cure. Why do we wear Livestrong bracelets? I mean, we are like, I agreed to be an advisor to a project called Pinkcoin, and people on Twitter immediately said, like, you're shilling a shitcoin, it's a scam, it doesn't do anything. And I said, guys, like, first, I actually don't own any, I didn't tell anyone to invest in it. It is a charitable community. That's it. And people were saying, so Pinkcoin it's literally a coin. And the idea is they have some interesting staking mechanisms to basically facilitate ongoing given to charity. But the pitch is not that it's an engineering change. It's just a community that wants to work together to give to charity. It's very similar to, like, would it be more efficient for us to donate money to professional house builders to build homes for people, as instead of us on a Sunday, like, actually doing Habitat for Humanity? Probably. But maybe we feel good, right? Maybe we want to hang out with our friends and do something good. So that alone, I think you're going to have a bunch of successful cryptocurrencies because of brand, because of community. Okay. Now to kind of really answer the question, though, I think the biggest use case in crypto is global store of value. Bitcoin, it's Bitcoins to lose. I think something an order of magnitude better would need to come out to kill Bitcoin, but that's very possible. So what are the odds that proof of work, which was the first ever cryptocurrency consensus mechanism, is the world's best? Like, you think about technology, what are the odds the first technological thing is the best ever invented? So here's what I think. I think it's Bitcoins to lose. Bitcoin loses it if a better consensus mechanism that is much better than proof of work comes along, that gives Bitcoin level security, or better, with much lower fees, much lower anything. So if proof of capacity is better than Bitcoin in terms of security and cheaper, that could kill Bitcoin. The other is, we don't know that blockchains are great. So blockchains are one of the first kind of forms of DAGs. Minor fun data point that I was corrected on recently: a blockchain is a type of DAG. We use them generally to refer to different things. We call IOTA DAG, Bitcoin a blockchain. Technically, it's blockchain is a type of DAG, but there may be other types of distributed ledgers that are better than blockchains, like maybe much better. So I have no idea if Bitcoin's going to ultimately win. I think there's some technological questions there, some game theory questions. I think Bitcoin is the front runner to win the most valuable use case, but then there's all of these other use cases that might be billion-dollar use cases.
I think that it's interesting when we look at Bitcoin, because as someone who does also own altcoins and thinks that there can be many different uses for blockchain, I look at Bitcoin specifically, and I feel fairly confident that Bitcoin will win this race, just because even if you look at maybe some of the newer coins that have better tech, or they're trying to do things in an interesting and innovative way, it's sort of like Trump a little bit, where, like, Bitcoin has had so many enemies and so many people hating on it and so many people that just attack it, but it just keeps winning, right? And so, like, the people that believe in Bitcoin, they're like, I don't care what comes out. Like, if something came out and it's like, this is like you can look at it, it is better than Bitcoin in every way. Bitcoin has no advantage over this new currency from, like, just a pure tech standpoint. Like, yeah, but it's not Bitcoin. And so I'm starting to believe, and this is a weird position as someone that's not a Bitcoin maximalist, but I am really starting to believe that Bitcoin is going to remain number one for potentially forever. You know, I'm not saying it can't be overtaken. I could absolutely see that happening. But like, how likely is that? It seems extremely unlikely, because such a large amount of the people that are part of the community believe in it, and so many of them are extremist on it, that I don't know if I ever see something overtaking it. What would it take? What would it take for something to actually overtake Bitcoin?
Sure. I'll give you one really simple example that is quite plausible. And by plausible, I don't know if it's 1% chance or what. So Bitmain right now produces roughly 60% of all the Bitcoin mining hardware in the world. They have made chip modifications like ASIC boosts in the past that went undetected. So we know that Bitmain could put a backdoor into their chips that was malicious in nature. Not saying they have, not saying they would. We know that technologically they could, and they could probably get away with it for a while without people noticing. Then let's say the Chinese government, I don't like, maybe Jahan is an angel, maybe Bitmain is an angel. Let's say the Chinese government takes over the facility, puts a gun to their head and says, we just want to destroy Bitcoin. We're not rational economic actors. We're willing to waste money. We'll spend a couple billion. We just want to destroy Bitcoin. They then use the backdoor in all of those ASICs, basically drop hash power in Bitcoin close to zero. At the same time, you do a little bit of a disinformation campaign, maybe to have mass confusion. So what would happen is the Bitcoin blockchain would shut down because there'd be hash power of almost zero. So block confirmation times would go from 10 minutes to a day or multiple days. At the same time, it'd be extremely hard to coordinate a fix. So some of the maximalists say is if that happened, we would do a proof of work hard fork. And it would be Bitcoin, but not. Then you have an existential question: is it still Bitcoin? So all the Bitcoin maximalists on your show say if you change from SHA-256 something else, it's not Bitcoin. So you would no longer have that consensus that this unchanged thing, which is never hard forked, or at least since 2010, it'd be unclear if it's still Bitcoin. You would have debate, a little bit of a government disinformation campaign who co-opt a couple of the thought leaders. Maybe they kidnap a couple people. Maybe they don't have to. It's bribery. It's whatever. You create this message on social media. We're just really unclear what's going on. So the Bitcoin blockchain has literally ceased to function. Some of the core developers are trying to organize to do a hard fork to change the proof of work mechanism to get Bitcoin back going. And at the same time, you have a little bit of a disinformation campaign such that people like you and I, even who are somewhat plugged in, are like, we don't know what's real. We don't know, it's so hard to organize a fix to that. And that could happen at any time right now, like any time. I think it's very unlikely. The odds are very, very low, but nothing has to, there's nothing radical, that could literally happen tomorrow.
But what would incentivize Bitmain to cease mining? You're saying that Chinese government?
Chinese government, yeah. So if Chinese government said we think this is a threat to our capital controls, to the strength of the yuan, or it's being used for drugs and terrorism, whatever. The Chinese government says we want to destroy Bitcoin globally. Why? It's almost like, why wouldn't they do that?
But it's kind of weird because China is so involved in Bitcoin. I feel like if that was good, and again, you never want to rule out the Chinese government doing something because they can do whatever they want. But if they were going to take those steps, you think we would have seen them earlier, and we kind of did see it earlier back in the crash in 2013 when China was just like, okay, Bitcoin, they essentially made Bitcoin trading illegal during that period of time. I forget exactly what they did, but the point is, with so much industry being based around blockchain in China, it would seem kind of weird for them to do this out of left field. Although maybe if they wanted to support Bitcoin Cash instead, maybe it could be possible. I'm trying to look for reasons, man. I don't think it's very likely, but okay, that's at least it's cool to
well, no, I'm not saying it's likely. And maybe it's not China. Maybe it's Russia or North Korea or whoever. The point is, right now, if you can get control of Bitmain, meaning basically, I don't know exactly what Bitmain security controls are, but it's probably not more than 3 people you have to put a gun to their heads. So maybe it's a U.S. SWAT team, maybe it's a Russian team, maybe it's someone who, maybe it's Vitalik, takes $100 million, hires a team to go and kill Bitcoin, right? Of course, I'm joking, but the point is, anyone who puts a gun to the heads of a few people. I shouldn't say this, right? This is a horrible thing. It's actually very scary for our industry that stuff like this could happen. So right. I shouldn't frame it this way. But the point is, if someone in the world could coerce 3 people at Bitmain, they can probably kill Bitcoin right now if those backdoors existed. So there's a lot of ifs here. I'm not claiming, right? I'm just saying one possible scenario that could happen. In terms of China, I agree. Like China's, I have to imagine, very happy and excited about the Bitmain IPO. It's just a huge amount of money flowing into China. It's a Chinese company becoming a world leader in ASICs and possibly AI. With that said, like the Chinese central bank hates Bitcoin. So China is a very multifaceted place that I don't understand. The insiders I talk to about China, they're like, yeah, it's a similar to any, like people who talk about the U.S. government. It's silly. There's no U.S. government, right? There are different people and bureaucrats and branches and people who hate each other and are fighting. And there's, in the same is true in the Chinese government, probably more so. So there are Chinese Communist Party members who work with Bitmain. There's the central bank, which from what I hear really doesn't like Bitcoin and other challenges to their monetary authority. But there's a lot of people who own.
That makes sense. That makes sense.
Yeah. But like Steve Bannon owned a ton of Bitcoin and was briefly in the Trump administration, right? As far as I know, Steve Mnuchin doesn't, and Steve Mnuchin is running the Treasury of the U.S. And so at some point, he probably doesn't like Bitcoin because it's competing with his dollar. They're not there yet. Bitcoin's not big enough yet to put pressure on the Fed, basically. The point is just there's different people with different economic incentives.
What are your thoughts on how Bitmain has such a monopoly on the mining? I know that a lot of the graphic card processors like Nvidia, that they actually have some degree of it as well, some share of it. But we see Bitmain, because they're specifically making ASICs for mining, we see them have just an absolute stranglehold on that industry, and we're not really seeing many people break in to kind of take market share. I want to say that last year, I think Bitmain did something like $3 billion in revenue. It was in the billions. I'm almost sure here. What are your thoughts on one mining power having that much power in Bitcoin, and is there any way that we could really stop that?
So, as you know, this has been a huge talking point for years in Bitcoin. I mean, the single biggest attack vector for Bitcoin is 51% attack, and it's not really that. It's the scariest point for Bitcoin, I think, was, for me at least, heading into SegWit 2x last November. Jahan Wu of Bitmain actually wrote an open letter where he threatened to do the worst kind of attack that could have killed Bitcoin, which was a rollback or reorganization attack, which is kind of an extension of a 51% attack. So specifically what he threatened, what he said was, I can mine in secret for 12 hours the longest Bitcoin chain of empty blocks. I can then dump that chain on the network. Every Bitcoin node will accept my chain as valid and will roll back the previous 12 hours of transactions. It's a chain reorganization. It's the same idea as a 51% attack, it's just with a different motive and a longer time frame. Jahan was saying, this was game theory brinksmanship. So Luke Dash Jr., who's a Bitcoin core developer, said, if SegWit 2x happens, and if the 2x chain has more hash power, and if we feel that Bitcoin core is insecure, we're going to fork the proof of work mechanism. And then if we win, Bitmain becomes worthless because all their ASICs don't work. And Jahan Wu said, basically, if you try to play games with us, I'm going to destroy your network. And we're going to do this with a rollback attack. Jahan probably could have done that, and it would have been devastating. Because you think about, imagine if you're Coinbase, right? Imagine if you have no idea that at any point the last 12, 24, 36 or more hours of transactions can be totally rolled back. So imagine if a hedge fund gives Coinbase $50 million in Bitcoin and gets 50 million in cash. A day later, the hedge fund might have both the 50 million in cash and the 50 million in Bitcoin. So what would happen is Coinbase has to basically shut down. Like any large, so you know, a lot of sites will require 4 confirmations or 6. There's no limit. So if Jahan Wu controls 51% of hash power, he can do a rollback attack at any point that goes back 3 days, 5 days, 10 days. There's a cost to him doing that, but it's pretty small. So it's scary, and it's not fixable. So it's fundamentally not fixable. So the hope is that this will organically get fixed kind of economically, that you're going to have more competitors. So, and I am optimistic here. So why does Bitmain have a stranglehold? Their moat is actually pretty small. Like economically, ASICs go obsolete within 18 months. And that's maybe even it's probably shorter. And so every 18 months, Bitmain has to reinvent the next generation of ASICs. And it's a race to do that. And it's a competition. Bitmain got where they are because they have the world's best electrical engineers at this. They're amazingly good at it. They basically were just so much better than NVIDIA and other competitors that they became the world leader. But that's not really a moat. So NVIDIA can poach some of the top employees from having the smartest people at a company is not a sustainable advantage because smart people move. You can poach smart people. You can hire smart people. There's no reason to assume that Bitmain will be a leading ASIC producer in 5 years. They're going to have to fight every 18 months to be the best at that new ASIC.
Right, but they're going to have the advantage of having a ton of money and having probably pretty good connections to those people. So when you say fight, it makes it seem a little more fair than I think it's really going to end up being.
They certainly have advantages, running their own mining facilities, knowing everyone in the Bitcoin world, and they're spreading their tentacles. So they're now investing in everything and anyone. They're investing in exchanges. They're all of that. They're trying to create a moat. They're trying to create these sustainable advantages. All that's true, but NVIDIA has a lot of money. And that is maybe one of the reasons to do their pre-IPO, IPO. Obviously, they have billions in cash. ASIC manufacturing is billions in cash of outlays to be at that level. So if they have an extra 5 billion in cash, maybe that does help them actually maintain their advantage.
All right, so let's change the topic here. So I actually had some questions prepared for you from some different people that wanted to ask you some things, and someone was particularly interested in regulation. What are your thoughts on the current landscape for cryptocurrency regulation? Where do you see that going? I guess we can take a look at it from the U.S. perspective. We can take a look at it from a more worldwide perspective. Feel free to just talk about regulation in any capacity.
Sure. So first, almost all of the major crypto centers, South Korea, Japan, the U.S., There has at no point really been regulation that was unfriendly to crypto. It was all about enforcing existing laws. So the SEC said, if you want to do a crypto ICO, go for it. Just register it as a security. That's it. If you want to be a crypto exchange, go for it. Just follow FinCEN rules, report taxes, do AML KYC, just act like a normal exchange. So same was true in South Korea. Like the headlines that we had, I don't know, in January and more recently as well, Japan, like it was Japanese authorities raid Japanese exchanges and like confiscate computers. And they were doing it because they weren't paying their taxes. They weren't doing basic AML's anti-money laundering, know your customer laws. It was basically they just weren't following the basic laws. So far, the developer world has been very crypto friendly from my perspective. The head of the CFTC in the US, Giancarlo, says he mines Bitcoin with his son. He's like a cheerleader for Bitcoin. So
I remember Giancarlo. He was that guy the community rallied around, right? Like he came out. He's the chairman of the FTC.
CFTC.
CFTC.
Yeah, the commodity. Yeah,
I remember that. I remember that.
That's the regulatory body overseeing anything that's not a security. So Bitcoin, Monero, Bitcoin Cash, Litecoin.
I remember that day that he said like, was it his niece or daughter or someone was really interested in cryptocurrency that he knew and like this is gonna happen. And I remember him saying all these things, and on every subreddit it was just his face, just like all of the posts, like follow this guy now, like retweet everything he tweets. That was a great day. That was honestly a great day for the community.
Absolutely. I mean, to have the guy who regulates Bitcoin say he's a fan of Bitcoin is huge, and he was testifying before Congress supporting, So we've been pretty fortunate, frankly, with regulation in the sense that there's been nothing that's anti. What's been really frustrating for a lot of people, I think, very reasonably, is the lack of guidance is very weird and frustrating. It's not weird. It's totally common. It's just annoying. So if you're trying to do an ICO right now, it is so expensive. You spend so much on legal fees because you have lawyers talk to you for 30 hours, hand waving about different potentialities because the SEC won't tell them. So if you're a project that's looking ICO and you're a good actor and you tell the SEC, we're planning to do it this way. Here's our contract. Can we do this? Is this valid? The SEC will not answer, which is problematic, right? Because you're trying to be a good actor and you can't get a clear answer. And maybe 2 years later, the SEC says, nope, that wasn't okay. We're putting you in jail. So what's happened is the fly-by-night, the bad actors, they ICO because why wouldn't they, right? They're scam artists anyway. The more buttoned up traditional good actors who have something to lose, the people who are maybe a little bit older, a little more rational, a little wealthier, they're kind of not ICOing because they're scared, right? They don't want to take that risk. So you end up with this negative selection effect, which is that the worst actors ICO and the better ones don't. And I'm not saying there's some great people, very legal, very upstanding who have ICO, but I mean, there's a lot of the people you want to ICO, a lot of them aren't.
Just to clarify, you're talking about within the U.S., right? Because I think when you look worldwide, then there's less of a confusion as to whether you're allowed to do it or not. So there are plenty of people who are ICOing in other countries that are completely legitimate projects. It's just in the U.S. specifically, I think a lot of people that care, that have something to lose, they're not ICOing because they don't want to risk it. Is that what you meant? I don't want to put words in your mouth.
Yes, although I think that statement is true in much of the world. There aren't that many countries that have really clear cut. So you have countries where people are hosting their ICO, like Switzerland. Like let's use Switzerland as an example. So a lot like the Ethereum Foundation was based in Switzerland. So is the Tezos Foundation. Switzerland seemed to be crypto friendly. Even that's unclear. So there are now lawsuits going on with the Tezos Foundation. And the way the Tezos Foundation was set up in Switzerland, it's not clear if it was as insulating as people thought. But those are where they're hosted. The problem is the laws apply if you have any investors. So a lot of projects now say we do not accept US investors because it's too expensive to be compliant or too hard. Some of those also say we won't take South Korean, Japanese, Chinese, Singapore, Hong Kong. Like a lot of the world follows the SEC. So Singapore will very often say, as soon as the SEC issues new guidance, Singapore just copies it. So there's actually, like, I would say in most countries, you do not have regulatory clarity on what is and is not a security. And most countries have some kind of security compliance. And the reason this is such a big issue is because it's really expensive to comply with offering a security. And so you have a team of 25-year-olds with an idea on a napkin, maybe some engineering, maybe some code, and you tell them, hey guys, you're going to spend 2 million legal fees in 6 months to do a secure, a registered, a compliant secured offering. And they're like, but all these people want to give me $20 million. Like, why am I going to waste 10% of their money paying legal fees? Like, why, right? Like, we're being honest, we're good actors. Like, why do we need to jump through all these hoops? Why do we need to wait 6 months, right? 6 months is an eternity here. So that's why everyone's kind of trying to not be a security, because it's really expensive to be a security.
Yeah, that makes sense, and that acts as a barrier to entry for a lot of projects as well, as the additional amount of cost there just in legal fees that it's going to take you to get off the ground.
And it is a huge cost. But so to answer like where things going and kind of so I think a lot of people have been pleasantly surprised. The SEC at the beginning of this year rained fire and brimstone verbally. So they said, we're going to go after all these bad actors. We're going to go after law firms that told projects they weren't securities. We're going to go after advisors. We're going to go after investors. So far, they've only gone after true bad actors. They've gone after scam artists. They've gone after fraudsters. The concern is you have a lot. I mean, Ethereum, let's take Ethereum, right? Ethereum was an unregistered security offering. It was illegal. The SEC has indicated that they will not go after Ethereum because Ethereum, they weren't trying to be bad actors. They weren't trying to scam people. It was a long time ago. The investors made money. So a concern for a lot of people was, well, if the SEC really wants to, they can kind of go after everyone in crypto. They can go after every exchange. So any exchange that has a US customer, anywhere in the world that is a US customer, that has a token on it that the SEC says was an unregistered security offering is a criminal exchange. Now, I say that. That doesn't mean that they're criminals. Doesn't mean they're going to go to jail. So here's an example. Poloniex. Poloniex absolutely violated tons and tons of laws. And I say that not as an accusation. It's just objectively true. They had tokens on there that were unregistered security offerings. That's illegal. What the SEC said was Circle, which is minority backed by Goldman Sachs. They're a big OTC trading desk. They're also a payment processor. They bought Poloniex. And the SEC told Circle, if you buy them and you clean them up, we won't sue them. We won't put them in jail. We won't shut them down. So the SEC is not like, the SEC generally is pretty reasonable in the sense they want to go after bad actors. They want to protect investors. The concern that I have, and I think a lot of people, is what if the regulatory regime changes? What if it goes fire and brimstone? What if Donald Trump starts tweeting, every person using crypto is a criminal. I want to end crypto. And he tells the SEC, I want anyone who ever touches crypto, find a way to put them in jail. The SEC has a lot of ammunition there. There's a lot, almost everything in the crypto world violated something in some gray area. So it was an unregistered security offering, or it was an exchange that listed it, or it was an OTC desk that traded an unregistered security. These are not like, you know, on the scale of criminality, like I'm not saying these are bad people at all. They're, you know, they're operating in a new industry. I mean, you look at Uber. Uber breaks rules in every city that they open in, right? They move fast and break things, and then sometimes, and they get penalized. They get fined all the time. They're great entrepreneurs. Doesn't mean they're bad people. But if attorney generals wanted to destroy Uber, they probably could.
Yeah, and that's where it gets interesting because it gets so subjective in terms of what the government wants to enforce. You see kind of the same thing with the way that the weed industry has been growing over the last several years, and that at a federal level, like a lot of these companies are operating illegally, but they just aren't going after these companies that are doing it, and states are legalizing it. So, you know, I've made a few investments into that space, but it's always kind of like a little bit, how hard do I really want to go here? What happens if like the federal government decides, you know what, we're going to enforce stuff? There's a lot of gray area, and that's actually one of the things that I really dislike about the way that our government works, is that there are so many areas where you don't know what's right. You know, under a very strict interpretation of things, maybe it's not allowed, and then you see all these people doing it, and then like there's no like, are you allowed to do it or not? And it becomes such a gray area, which is why in general I'm not a big fan of having a lot of government regulation anyway. But let's actually talk about one of the things you talked about there for a moment. I remember seeing that deal where Circle purchased Poloniex. I want to say it was like for 400 million, but I read about the details of that, and their plans with that exchange were actually kind of interesting. They weren't planning on continuing to be just a digital asset exchange any longer. They're planning on adding in like all kinds of things. Like I want to say I saw things like real estate, art. I saw basically they had like a full list of they're going to become a security exchange, securities only. Do you remember specifically what I'm talking about? And
no, I'm sorry. I actually don't know.
Okay,
I didn't
gotcha.
see that report.
No problem. Yeah, it was very interesting. Like, maybe you can go back and take a look at the deal, like the way that Poloniex is headed. And it's also interesting when I see Poloniex, because a few years ago, Poloniex was a much bigger player than they are today in terms of how much volume they were trading at relative to other exchanges. Now you've seen them fall out of favor for more of the Binances, the Bitrexes, those types of exchanges. But they're headed in an interesting direction. I would not be surprised to see like Poloniex a sort of relaunch or rebrand or do something, and really have some very interesting things that they're offering, some services that they're offering over there. Anyway, obviously, if you don't know too much about that, then we don't have to dive into it. So let's talk about this. You talked about how bad actors are just going ahead into the ICO space because what do they have to lose, right? These guys are just trying to make something happen. And if it's been going like it has for everyone else in the market, they probably lost everything. But regardless of that, what are your thoughts on the ICO market in general? Are there still opportunities for people to invest in that space? What are your thoughts on the wonderful world of ICOs?
A really interesting dynamic. Sometimes markets crash in slow motion, which is always a little weird. It's like you kind of see it happening. Like, why is it happening so slowly? So in 2007, I had just started as a professional trader, and equities had not yet made their all-time highs. Like the highs were made in mid 2008. And I remember one of the principals of the firm, of Susquehanna International, a big trading firm, he like was frantically running down like the hall, and everyone was like, Arthur, what's wrong? And he goes, the markets are crashing in slow motion. And it took another like 8 months for equities to make their highs. What he was seeing, what he was looking at, was the municipal bond market was freezing. The junk corporate derivative market was tanking. But these were like small markets that a lot of people just didn't look at. And he understood kind of the structural importance. And so I kind of feel the same way. I think this is probably not quite fully played out, but we're getting closer. So end of last year, anyone who invested in ICO at any stage made money, right? Didn't matter if you were the fish who, like, even if you bought on the exchange listing, you still probably made money. So the first money in made money, then the second, then the pre-ICO with the 50% discount, then the pre-ICO with the 20%, then the guy who was in the ICO, and then the guy buying on exchange. They all made money, right? Because everything was up so much. Starting in February, the guy who bought on the exchange, they were all underwater, so they stopped buying. Then what that means is the person who bought pre-ICO, they were still up though, because they got their 30 or 50% discount. They were still doing okay. So they kept investing pre-ICO. But then they realized, wait, there's no ICO buyer. Or there's no, like, first there's no exchangeless buyer, then there's no ICO buyer, then there's no pre-ICO buyer. The last people to stop actually investing were the smartest money. It's kind of funny. Like, they were like the dumbest, because what happened was they were still up on everything because they had gotten such deep discounts. And so like I would see projects, this only clicked for me, frankly, in like March, where I'm like, okay, here's a project that it says they're going to raise at 150 million and they're offering me like this crazy sweetheart deal. And I'm like, oh, that sounds awesome. An 80% discount? That sounds great, right? But then you think like, you take, another second, you say, well, like, okay, it's an 80% discount, but to what? If no one's going to buy the 150 million, I'm still paying whatever it is, 30 million for a idea on a napkin, which is absurd, right? Like 4 guys just had an idea and are like, and I'm investing in that at 30 million. I'm the idiot now, right? So so it took some time, but like the smart money kind of realized that. And so what's been happening now is just a lot lower transaction volume, a lot fewer ICOs. Most ICOs have done terribly. What I always tell anyone basically is you just shouldn't be investing in ICOs unless you're a professional, unless you're doing it kind of very seriously. It's such a strong negative selection bias. This wasn't true a year ago. So if you were in crypto, like, there were a lot of good ICOs that you could get into in February, March of last year. What happens now is you get crowded out. So I won't name funds, but like basically the biggest crypto funds will take the full allocation very, very early at a price that is attractive. If you're able to get into that round, it probably wasn't that good, because it means that someone like me I left something for you, right? And why did I leave something for you if I thought it was the best thing since sliced bread? So if something's left for you, it's kind of a negative selection effect. It just means you're probably not going to get into the best deals. More and more the best projects, a lot of them are just not ICOing, and the reason is it's such regulatory overhead to have an ICO at all. So like a model that became popular in China was you have a pre-ICO and no ICO at all. And the pre-ICO will have 20 investors, usually funds or like high net worth individuals, and then you go straight to exchange listing because it's so much cheaper and easier. It's safer from a regulatory perspective. There's very few like public ICOs that I think are good, and I think it's very hard for the average person watching this to diligence it and to be in the right ones. And the valuations are still almost entirely insane. So yeah, they've come down from, okay, this was a 300 million valuation to a 60 million. $60 million is a lot of money. Like, these projects are not worth $60 million. They have no users. They have no intellectual property. They have open source code, maybe. Sometimes they don't even have that. They have a white paper that says they're planning on building open source code. They have a wonderful team. They have a great team, which is a couple of PhDs, a guy from Facebook, a guy from, I mean, like, if I walk into Facebook and I walk out with 5 random employees, that is not a great team. That's not a team worth $30 million, right? There might be great people, but for a VC to value something aggressively on the basis of team, it has to be, if Elon Musk came to me and said, Ari, I'm not going to tell you what I'm going to do next, but I want you to value my next project at 30 million, sure, right? Elon Musk is like a great part of a team. A random guy with a PhD from Stanford is not a $30 million project.
Especially if he's not even the guy from Stanford, because we saw a bunch of that happen to some of these ICOs as well. Yeah, that absolutely makes sense. But one thing that I have seen is, as the market has turned around and as people are sort of scared right now, there's a lot of scared money because we've seen just the market plummet. I have seen more opportunities sort of arise within projects that maybe once they had secured all the funding, now it's not so much. So do you think maybe there's potential for opportunity in this type of market, or would you say buyer beware, because if there's something left, there's probably a reason?
I think, look, there are opportunities. I'm not saying there aren't. I'm saying it's more like the average person listening to this. So like, if someone's listening to this and they're really in the crypto world and they're studying and researching and they're traveling to meet teams, then sure, there are opportunities. Absolutely. If you're not doing the hard work, if you're not visiting and meeting the team, if you're not channel checking, if you're not, so like channel check, like it's amazing. Like no one in crypto does like almost any real diligence. So if you're a venture capitalist investing in a team and the team tells you, I'll give you an example, right? When our firm launched a year ago, there was like one of the first projects I looked at was, I won't name them, but they were a green energy project. And I met the team in person. They were really smart guys. And they told me, we have 30 testnet projects up around the world, including with the government of Israel and the University of Vienna. And I happened to know a random guy in the Department of Labor at the University of Israel. And they said, and I asked, so I like reached out to him. He's like, I haven't heard of them. And I asked them, I was like, which department is your contact in? And the guy said, Department of Labor. I'm like, okay, well, can you put me in touch with this individual? And they gave me like a random guy who had never, who he ended, when I had to push to get a name. And the guy said, I met with them once a year ago. I didn't barely remember them. And like, it was I checked 2 more of their 30. And these were the ones they gave me to check, right? These were the 3 of 30 I was spot checking. And they were shocked that I asked to do that. And we were going to be like a lead investor in their round. Like we were talking about giving them $1 million. And they were shocked that I was asking for, I'm like, I don't want to check all 30 of your references. Give me 3 and you can pick them. Like, give me 3 names to talk to for 10 minutes each, right? 10 minutes. And they were like, wait, no one does that. Like, what do you ask? You know, they were almost put off, right? So the point is, if you're in the weeds, if you're a developer, if you're an engineer, you can look at the protocol, or if you're, someone with willing to do kind of VC work, I'm sure there's opportunity. We're not at blood on the streets in the pre-ICO space yet. You still have, there's one project I have in my mind that they were going to raise an 800 million valuation, and then they cut it to 350 million because of market conditions. They have no users, they have no real intellectual property. Like $350 million is still an outrageously high. That is not blood on the streets. That is not a deep value buy. Might be a great project, but I wouldn't think of ICOs as scooping up value at this point. I don't know that we're going to get better pricing. I'm not sure. I actually don't know if we're going to see like a real, like March of last year, you could have invested in things like Augur at 20 million valuations. Those were great projects that had been worked on for years, that had massive amounts of work and code and game theory behind them, that had, the top players in the space kind of working on them. We're nowhere near seeing that. A project of that quality today is probably raising at 100 million plus.
Right. Okay. That makes some sense. So what are some projects coming up that you are excited about? Is there anything that's happening, any new projects that you are excited for?
Yeah. So I think there's a term that I refer to a lot, Gartner hype cycle. Gartner was actually a consulting firm that just added their brand or their site stylization to this idea of hype. And the idea is that it's really simple. It's a new technology is born. People get really excited that it's going to change the world. Everything associated with that technology gets bid up. You get a bubble. And then you get disillusioned, and people realize, wow, engineering takes time, user adoption takes time. It's not that we were wrong; it's that this stuff just takes time. So, like, you look at email was invented in the early 70s. In 1994, only 10% of the world had access to it. Like, it took so long for email to become a thing. It took decades, right? And that was like very simple tech that's hugely valuable. So we've seen the same. In 2013, everyone thought Bitcoin was going to be used for coffee tomorrow. And then there was this realization, wait, Bitcoin has no users. It has 7 transactions per second as a limit. It has no user interface. Like, I'm copying and pasting public keys. It's like kind of like using a command line. It's like when the first computer technologists in the 70s were like, this is going to spread like wildfire. People are going to use a command line interface. Like, no, no one's going to use a command line interface except for the tech geeks, right? And I use that term lovingly. So we're finally ready, I think, for a couple use cases. The sexy stuff is still years away. So having a functioning DAO that actually is more than a plaything is still years away. Something like, Augur's a great example. 4 years in the making, a great team. It's insanely ambitious and complex. I view it as a success story, but no one uses it. So they have like 100 active users at a time because the user interface is terrible. It's kind of an unstable platform. And I mean that not as an insult to the team. I think they've done amazing work. So what am I excited about? We're finally going to have Bitcoin or other cryptocurrencies used for what Satoshi intended. The Bitcoin white paper was peer-to-peer electronic cash. Finally, we're ready for that. So I think Ripple and the company behind Stellar Lightyear are looking at buying remittance companies. You might have a crypto native remittance company, or it might be one that's purchased that will integrate a cryptocurrency as a backend. Could be Ripple or XRP Ledger. Could be a new coin. Doesn't matter. This is not a bet on a coin. The coin almost doesn't matter. It's more that you're integrating a cryptocurrency into a remittance infrastructure that has users, that has physical locations, that has. So I think in the next year, there's going to be serious talk by Wall Street analysts about what impact on Western Union crypto is having, whereas to date it's been zero. Western Union's not going away in a year, but the discussion will start.
Oh, damn.
Yeah, no, I know, right? At Western, I love to hate them as well. You're finally going to have a PayPal or Venmo version of cryptocurrency. So there's a lot of very credible like it's funny, a wallet doesn't sound like a hard thing, and yet having a crypto wallet on your phone, until maybe in the last 6 months, there was really nothing good. I mean, you had things like what is it, Electrum, or I don't know, Mycelium. There were some of these early wallets that existed on your phone, but bad UIs. And I don't mean that as an insult, but it wasn't Square, it wasn't Circle, it wasn't. I mean, Coinbase became what it was because they were usable, because it had a pretty nice user interface. So finally, I think we're going to have like a Venmo for crypto, where we're kind of people actually use it. I don't know if Americans will use it because we have Venmo and PayPal, but a lot of the world doesn't have Venmo and PayPal. So it might be Venezuelans or Zimbabweans or unbanked people in Africa. So that's one, like payment, and then the other is games. So I'm like really something I'm diving into and like really wholeheartedly is Ethereum sidechains like Loom and similar technologies finally allow for a game on a blockchain. It wasn't possible a year ago. And when I say impossible, you had things like Hunter Game, I think it's called. Like you had some really simple games, but they weren't going to get mass appeal. You can now have dozens of transactions a second using a sidechain that gives you kind of close to Ethereum-like security. You also have the world's best marketers and growth hackers realizing the opportunity. And you have things like ERC 721 that standardize the process of having collectibles. So something like we right now are underwriting an investment in equity in a company that is doing crypto games. And it's really interesting thinking through. There is no successful crypto game ever. So CryptoKitties was maybe the test case. And those guys are great. I have huge respect for them. Thinking about the economic modeling, if you're a VC looking at crypto games, here's the question. When you try to model a game that hasn't been born yet, you care about how many users will it get and how much money will it make per user. The bet in crypto, it's going to be a lot harder to get users. It's going to take time to get really good user interfaces, really good marketing. The first successful games, I think people won't know they're crypto-based. So it'll be in the iPhone App Store. I'll download the game. It'll be a free game like Fortnite or Game of War. And when I get to level 5, it'll ask me if I want to integrate cryptocurrency. But like it'll be so seamless, I won't even know it's a crypto game. That might still be a year or 2 years away.
Why would people want to put games on the blockchain though? I don't really see what the upside is. Can you explain that?
Yeah. So the math here is insane. Game of War, which is a game by the company Machine Zone, 2 years ago made $2 billion in cash. That $2 billion in cash, only 1% of their users pay anything. It's a free game. They had more than 1,000 people who paid more than $100,000 each on in-game purchases. Let that sink in for a second. It's insane. They had, I don't remember what the number was. It was like there were a dozen people who spent more than $1 million each in game.
But why on the blockchain? I mean, I get that these are huge games, man. I've seen the numbers.
No, I get the question. So I wanted to establish that there's people putting crazy money. The why blockchain? Because those people, they have to be worried that if the game becomes obsolete, that investment is worthless. If the company behind the game shuts down the server or bans them as a player or chooses to confiscate their item or goes bankrupt, their investment is gone. If it's blockchain based, there's a couple interesting things that happen. So one, they can at least hope that the game could survive the centralized production company behind it. It could be revived. Another is the items can be shared between games. So imagine if I am playing a Blizzard game. I'm playing World of Warcraft, right? And I get my level 50 sorcerer. I can hope, maybe Blizzard implies this or tells me or promises that the next game they put out, I'll be able to transfer my character or I'll be able to transfer inventory items. I'm probably going to be a lot more comfortable investing in my in-game character because it's transferable. It will survive that game. My investment, it becomes greater than the game itself. So some of these early crypto gaming projects, they're already talking to each other about allowing a user to transfer an in-game purchased item across games. So if I'm a user, I'm probably willing to spend more money. So this comes to that economic question. So a bet that I'm kind of making is I think the monetization per user is going to be higher for a crypto game because people are going to be willing to spend more money because the stuff they spend money on is more secure. And it's more likely to persist for longer and be more usable in more realms.
That's really cool. You know, I never thought about that specifically, but when you did say that you could transfer this into another game, it's something that you actually own the asset that can be held off game or whatever happens in the future with it. It does make it seem more secure. You're not just hoping that they come out with new versions of the game and update it, and the company is doing well. You actually own the asset, which is It's a really weird. It's trippy, man. We're
It
getting
is.
into trippy space here because it's like all of a sudden we have a world based around like let's just talk about all these free to play games, or most of them are free to play. Like League of Legends is a good example. It's like one of the biggest games in the world. Fortnite, all these types of games where it's completely free to play the game, but then they have these in-app purchases. It's strange to me because I'm not really big into the purchases. In fact, I've streamed some of these games on Twitch before, and one of the questions I constantly get is, "Oh wow, this guy doesn't even have any skins. Like, was he broke?" Like, no, I just didn't want to buy any skins. I don't really feel compelled to. But this is really where the world is headed,
Yeah.
and I think, by the way, this is also a very good thing for cryptocurrency because the young generation loves the internet. They love anything tech related. They love computers. They love this stuff. And so when I see how successful a lot of these companies are with having, selling capes in League of Legends or whatever is going on, I'm like, man, if that can do as well as it's doing, then I feel great about Bitcoin. I feel great about where the space is headed in its entirety because the young people are with this stuff, and there are going to be more young people, not less.
Totally. I mean, it's beyond liking the internet. Have you seen Ready Player One or read the book?
You know what? A bunch of people told me to go
Okay.
watch it, but I didn't see it.
It's a fun movie. The premise is just in the future we're probably going to have virtual lives, or at least some portion of the world, which is probably true. Exactly what form that takes, I don't know. But the idea of making these crazy in-game purchases, if you think of something as a game, it makes no sense. Why would you spend $10,000 on an in-game item, right? It's a game. You're playing a game. If you think of it as a portion of your life, a portion of who you are, it starts making sense. So, like, it's crazy. There are people who spend 40 hours a week playing World of Warcraft or 40 hours a week in Sim Life, and those are really simple games on a screen. Once we have VR, and these are immersive real-world games, it's very easy for me to imagine, like, why is this stuff so addictive? Why do people spend so much time? Because life is hard. It's not obvious how you level up in life. You can do a lot of right things for years, and shit happens, and you don't get the points you think you deserve. Whereas what's amazing is games have been getting simpler. And it's so appealing, I think, to people in a chaotic world because it's like, I know if I do X, Y, and Z, I will level up. I know I will get these points. I know, like, it's so predictable that it's not that I want to, like, some of the early computer games, games like Myst, they were beautiful puzzle solving games.
I remember Myst. Yeah. Myst. It made me so frustrated for so long. I don't know why I played that game.
So those are, I mean, to the viewers who aren't familiar, Myst was a very slow single player game where you solve puzzles around this world, and it was kind of ahead of its time. It had beautiful graphics for the time. But those are not the games that are succeeding today. It's games that are insanely simple. It's games like Angry Birds, because Angry Birds, it's like, I know if I do the right thing, I get 10 points to my score.
This angers me, by the way, as a gamer. So my favorite game type has always been real-time strategy, because, and it makes sense that it's transferred over into playing poker, and to some degree, trying to figure out what I'm supposed to be holding in crypto. But it's like this idea of like, okay, we're gonna play a strategy game. It's me and my opponent, and I'm gonna try and outthink them. I'm gonna outwit them. I'm gonna figure out how to beat this guy because I'm smarter than him. And it's complex and it's deep, and there's all this stuff to consider. But that increases the capacity for edge, because the more ideas you have to think about, the more room there is to outsmart people or be outsmarted. And when you lose, you're like, you can try and figure it out. Okay, why did I lose? All right, well, I did this thing around this time. Maybe that was the incorrect play. Around this time, though, like, I like that, but maybe you should have this variation. And you learn. You lose and you learn. And part of that process is admitting I suck. Okay, I made some mistakes. They were mistakes. It wasn't like I played great. And learning from them. And the people that are like, I played amazing, I can't believe I lost, those guys are just idiots, right? Like, they're eventually going to lose. But so what I always thought that those kinds of games would be the biggest because they're actually fun. But I was wrong, because all of the people who are losing constantly, they're like, you know what? I don't want to play your dumb game anyway. I want to shoot some shit. Give me a gun, or whatever it is. And so now I'm seeing, and it hurts me, Ari, it hurts me, because I'm seeing this shift from games of deep intellectual strategy and cunning, and it's shifting over to like, oh, a chest, oh, what's in the chest, oh, it's a gold gun. Like, it hurts me. There's more of a rant than anything, but yeah, that's my opinion.
Yeah. So, but I mean, we're online in one form or another, like, constantly, most people, and especially younger people, as that, like, I think VR is going to be a huge jump, where the idea of having a virtual home is going to be very real. I mean, you have a lot of people who are never going to be a king in real life and who can be a virtual king. And think about how appealing that is. And a king in whatever that means for that person, whether it's designing their environment and having total control, whether it's creating a game they can never lose at, whether it's and it can be positive. It can be you're sitting in the Library of Congress, right? It can be a poor kid in a rural place with no one around him who can now be in an awesome public school, virtually sitting next to brilliant classmates. So there's a lot of good that can come out of that. But the idea that people will invest massively in their online life is very intuitive to me, and very like right now we see it and it's not really rational, but it's going to become rational because it's actually going to be like the dividing line between your real life and your virtual life right now we think of as a very clear line. The virtual life is for play, then you have your real life. Those are legitimately going to converge. We see that with social media. So, I mean, like you and I are both on social media a lot, and that's part of what both of us do professionally, right? I mean, you're actually paid for it. I'm not, but that's part of the way that I connect with people in the crypto world who I can then trade information with and insights and all that. I think of it as part of my kind of professional life, which is pretty crazy, right? The idea that if you told me 5 years ago, like I'm a late adopter to all technology. I was like the last person. I wouldn't get Facebook until my senior year in college because this was literally my thinking at the time that I actually told someone. He was like, dude, everyone's on Facebook. Like, why aren't you joining? And I said, I don't want to have to think about who to accept as a friend. I'm like, I don't want to deal with that. And it was such a naive view of like, you just accept everyone as a friend, right? Unless you really don't want to. Like, it's not, you don't have to like puzzle over every person who sends you a friend request. But I kind of thought you did at the time. And I was like, I never joined Twitter because I'm like, isn't Twitter for like the Kardashians? And then I joined Twitter and I'm like, wait, everyone in crypto, including the top venture capitalists, like partners in Andreessen Horowitz and Uniscore Ventures are on Twitter all the time. It's like, you have brilliant people having actually meaningful conversations. I get to debate the Bitcoin core developers and Vitalik on Twitter, which is like crazy, right? And that's Twitter. That's like now 280 characters. Imagine when it's like a virtual world. So people are going to invest huge amounts of money in creating whatever kind of virtual persona and space they want.
But you know what? The reason that you like Twitter is the exact opposite reason why most people like social media. That you're like, oh wow, I can use Twitter to just get such great information from brilliant people and use that to create my worldview, and then have a discussion about my worldview and like find the problems with it and strengthen my ability to argue my position. That's not what people want. They want like, where are tits? Let's see some tits. Oh, no tits on Twitter. We'll head over to Instagram. Like that's people are operating at such a lower level than that on social media. So like and I'm with you, by the way. Twitter, of any of the social media platforms that aren't like video based, like I would say YouTube's probably my favorite platform overall, but of any of the non-video based platforms, Twitter's the best because you can really define your user experience. I can follow anyone that I think is interesting, and then if I don't find them interesting anymore, I can unfollow them. I can kind of customize what I want to see or talk about, and then I can interject myself into the conversation and actually learn some things. That's great. Getting to learn is great. That's probably the best thing about Twitter. Not all social media platforms are like that. That's why I'm basically never on a lot of these guys. Like I have a Facebook page, I have an Instagram page, all this stuff, but I'm never on Instagram. I'm never just like, oh, I wonder like what everyone's at. Oh my God, he's in Rome. Like I don't care, man. It doesn't matter to me if you're in Rome or not. Like it's not a big deal. So I agree. And by the way, I agree with the premise. I think that it'll continue to grow. We're going to see all these platforms grow. That's why there's so much money in these industries. And we're absolutely going to see the virtual world collide with the real one. It is scary to think about what that might look like. What do you see that collision starting to look like in the future?
I love thinking about futurism. I'm not a particularly good futurist. Look, it's scary. The idea that there are a lot of people who, okay, so how do these game companies trick people? And I say trick, it almost is. It's like our lizard brains, like the same reason people become drug addicts is the same reason that they don't spend time with their wife and kids or like leave work early to play World of Warcraft. It's not a rational decision. It's not even that they're having fun. It's that getting that incremental unit of gold gives them a little dopamine hit, the equivalent of an illegal drug. The games have gotten better and better and better. It's like they went from like cocaine to crack. Like they got better at synthesizing this thing that just triggers your lizard brain in exactly the ways they want to. So that's pretty scary, right? So as tech, it's like same with pornography. So cavemen, like, they might see 50 naked women in their lives if they were lucky, I guess. I don't know. Whereas now, like a 12-year-old can do that in like 30 seconds. Like real life can't compete. So you can kind of hack your brain. It's almost like, I don't know if you followed the AI community at all, but I sometimes like scaring myself with some of the, I'm blanking on the I can't recommend the book. I read a great book where one of the ideas is if you create an AI and you give it a very clear task, like to help people or to be productive or whatever, you almost certainly need to define a subtask that rewards it. This is all very speculative, and the idea is that I forget the term. It's like wire hacking, brain. I'm forgetting the exact term, but basically it means you short circuit your own brain. And so for humans, the equivalent is drugs. So in other words, okay, there's a few ways you could be happy, Doug. You can be really good as a poker player, as a podcaster. That takes work, right? Years of hard work. You can you can feel good by doing good things for other people, by being a moral person. Again, that takes hard work. Or you can take a hit of a drug. Well, the latter's pretty darn appealing, right? It's easy, it's there, it's available. And as that latter option gets better and more available and safer and less taboo, it's harder and harder for anything else to compete with it. So same with real, real world romance versus porn. Like as porn gets better and better, like a Playboy magazine isn't that much of a competition, but I'm a little worried about what happens when you have 3D immersion VR bodysuits. Like what in the real world is going to be able to compete with your wildest fantasy?
Well, that's a very good question. I guess it's going to depend on your fantasies, man.
Absolutely.
It's going to be easier for some people than for others.
Very true.
That's actually that's a great point. And I think that when you look at pornography specifically, I think that has a negative impact on like the way that people interact in society, the way that men view women, a lot of that type of stuff as well. But yeah, it's trippy stuff, and we're going to see what happens because capitalism is going to absolutely come in full force here, and anywhere there's money to be made, money will be made. And as we see it become easier for people to find these pleasure centers or get dopamine, get their dopamine levels going, yeah, it's gonna be weird to see where it goes. But there's actually kind of a different question I want to go with here. We're getting pretty off topic, but why not? So this is something that I strongly believe, which is I think that all drugs and prostitution, I think this stuff should be legal. I think it should be lightly regulated in terms of like the way that like there are some structures to it, but it should be legal. Take away these dark markets. I'd have to sell my Monero. No, I'm just kidding. But anyway, the point is, I really feel like the government, it's not their place to do this. And they also create the existence of so much crime, so much violence in the world. This stuff should be legalized. But when you say that you take away the taboo of it, I guess I have long had the position that I think, like, let's just take, for example, meth, okay? Let's just say that tomorrow meth is legal. I'm like, finally, I'm headed down to the local meth shop and picking myself up some meth. Like, no, I'm not going to do meth. I don't, because I know what meth does to myself or what it would do to me. Also, I'm not really that into drugs. But, my main point that I'm putting out here is that I don't think most people, like how taboo it is, I'm not sure that actually has a large impact on overall usage, because I think in some ways people are more likely to do it if it's taboo. And it's also still completely accessible to people that want to do it. So do you really think that like how taboo something is going to play a role in how often people will do it?
I'm ambivalent on this point. So there's a lot of good data that, the drug laws have been horrible for the world, right? So not only has it led to, racial discrimination and way too many people in prison and, all sorts of horrible things. And we destroyed half of Latin America because of the drug wars. So I'm not in any way defending current U.S. drug policy or past. With all of that said, here's where I am at least ambivalent. Imagine, I'll use a hypothetical. Imagine a drug so powerful that the tiniest hit you'd be addicted for life. Just hypothetically, right? Let's say that existed. I don't want a random 12 or 14 or even 21-year-old to make one minor decision that's a forgivable mistake, an understandable mistake, that then changes who they are fundamentally and ruins their life and may ruin the lives of people around them. So there's a little bit, there's a patronizing element to this for sure, right? So if you're a hardcore libertarian, you say, let people make their own mistakes. That's all well and good when a mistake is playing with a bottle rock and blowing off your thumb. It's very different when the mistake is fundamentally changing your brain chemistry in a way that literally changes who you are as a person in fundamental ways, in ways that are incredibly destructive to you and people around you. Now that drug today doesn't exist, but as you get close, like you look at like the heroin epidemic and then an opioid epidemic, like people who, someone who makes 10 dumb decisions doing heroin is probably now an addict of heroin. And they're kind of a different person. So they may then commit petty crimes and petty thefts that they would never have done just 2 months earlier because of their brain chemistry. So there's a little bit of a patronizing element. Do we want to be in a society where we know that a meaningful percentage of 21-year-olds or 16-year-olds or 14-year-olds will make a minor forgivable dumb mistake that kind of ruins the rest of their lives?
Right, go ahead.
Yeah, well, I was going to say, and then there is a question of, can we stop that? So there is a libertarian argument always. So that's kind of the liberal argument, right? Basically, we as patronizing government or society, we can protect people. The libertarian counter argument is always, you're going to do more harm than good. So yeah, that's a great story, Ari. But in practice, any drug law you try to enforce is going to have all these negative effects that we see. So even if I'm right that it's going to be bad to legalize all drugs, it might be less bad than what we have today. I'm not sure.
It's certainly an interesting question. And if drugs were as extreme as you're saying, like one hit, you're toast, then yeah, in that scenario, it makes more sense to I guess have legislation around it. But the thing is, this is going to come down to parenting. Like when your kid is 6, be like, if you ever touch this stuff, your entire life is going to be gone. And you teach your kids this. Like, is it really the government's role to be like, actually, you're not going to do that, like, because you're not going to respect the government. You're not going to. I know we're pretty far off topic. But
so where this comes in though is you look at gaming. So like I would argue that parents were woefully unprepared. The gamification, what this idea that you can have a free game like Game of War and entice people to spend tens of thousands, hundreds of thousands of dollars in game. It is like weaponization. It is turning what you like the version of Game of War, 15 years ago, like couldn't do that because basically these companies have created a science that is the equivalent of creating ultra crack. So my analogy of creating this like much stronger drug. So the same has happened with actual drugs, right? So like pot is like 100 times stronger today than it was in the 60s, and fentanyl is like heroin times 100 and much cheaper. And some of the reason the world has the drug problems it has is because people have literally invented stronger drugs, more concentrated, cheaper, all of that. And we're seeing the same on the dopamine hits on the electronic side. So I actually worry about a world where imagine a parent, let's say you or I are parents, right? And we're kind of novices as this world is evolving, and the kid has a game that his friend recommended, and we look at the game, and it looks like a great game. It's Barney and Friends, right? And the kid's playing. And it's kind of like the super drug version of that. So it's kind of turning them into this dopamine hit addict that really does rewire your brain. So yeah, it's not like a one hit and you're an addict, but like you have a kid on that stuff for 5 to 10 years, they're a different person than if they were playing outside, for sure.
It's like a war of games.
Yes.
Anyway, let's get back and talk about some different stuff here. We got a little bit here before we'll call it a day. What questions should we talk about? Do you want to just briefly talk about your experience playing poker? I know you had a background playing. Just like a small summary of your poker career.
Sure. I played a few times before college, but nothing serious. In college, I was on a fencing team. We were actually a varsity fencing squad.
I didn't know that was a thing.
Yeah, most people don't. So it was a lot of fun because it was probably my one chance in life to be like a nationally competitive athlete, which I could not have done in probably any other sport. So in fencing, we actually we were the Ivy League champs my sophomore year, and I was like an okay fencer, but in a varsity league, which was kind of cool, right? Which I could not have done in basketball or soccer or like any more competitive. I'm not a natural athlete. So that was a fun experience. And the fencers like love playing poker. So, and I'm kind of naturally competitive, and I like sucked for the first 6 months. It was just like, I was like the fish. And I was like, no, I'm going to get better. And I read Super System, and I read, was it Mike Caro and some of the books that were around back then.
Book of Tells.
Like I read everything I could find, and Sklansky, and so I started getting better. And I think a very similar approach to you, which is almost a fairly simple reductionist intellectualization of the game, of starting hands, of just thinking it through, kind of like first principles. Not like I wasn't a game theorist the way like a David Sklansky is. It was I think like very similar to kind of your approach, but again like nowhere near your level. But so I started getting pretty good. That was the perfect time to get into poker, because that was as we were heading into the moneymaker boom. So I graduated to Penn in 06. So those were like the prime years. And I knew it was a bubble. Like by my sophomore year, it was like, okay, I would go on party poker, and I'd be at a table, and I very quickly moved up in stakes. So I wasn't playing nosebleed, but I'd be playing like, I don't know, 25, 50 limit, let's say, right? And those games were so wild that you could actually have an edge of like $200 an hour in that game, which I know like if I tell a pro that today, they're like, you're crazy, you're stupid, you're lying to yourself, right? In those days, like you would literally have people who were capping the river against 4 opponents with nothing because they were drunk or high or tilted. The level of tilt was so extreme. You weren't looking to pick up an extra bet or a value or like an edge case fold on the river. Like, oh, that guy should have value bet the river, and that made me one big bet an hour. Like these were like, this guy is capping every single street, every hand. And he's $5,000 in front of him. He's going to be broke by, like, I would say this to myself at 2 a.m. I would have class at 9 a.m. I'd be like, this guy's going to be broke by morning. I can't leave this game. Like I have to be the one to take the money. Right. So, I played on Poker Stars, Party Poker. I played a little bit in underground Philadelphia poker clubs, which was a fun experience. Played in Atlantic City occasionally, and then pen poker games. I had a lot of friends who were really sharp people, great players. There was actually there was a pen poker scene that was actually like quite large and real. Like on any given night, there were like $1,000 up to $5,000 buying games, more like the 1,000. Also lots of smaller games, but there was a group of like 80 pen kids who like 3 to 4 nights a week would play poker with each other. All of us would also enter tournaments, go to Atlantic City, go to Vegas, play in Philly, but also play against each other. there were some games where there'd be like 40 grand on the table at the end of the night because people would, it'd be like a grand buy-in, but people just keep rebuying. And some of those were really sharp players who went on to be kind of pro, not necessarily like big name pros, but like play at a professional level. Most people, a lot of them went into finance. Like I went from that to become a trader because I was like, okay, this is awesome, but trading seems like kind of the next step. And I know this isn't going to be this easy forever. I played the fun and the peak and a key lesson I took away in life was heading into the summer of 06. I played $2,000 buy-in pot limit Omaha and party poker. And that summer was, I did a half summer semester abroad in Prague. It was like an academic program. And the other half, I lived with my parents and I was playing on party poker, $2,000 buy-in pot limit Omaha, and I was four tabling. And I remember this really clearly because so that game was so soft. My hourly rate was legitimately, probably like $500 to $1,000 an hour because until then, the highest pot limit Omaha game available online was like $200. And suddenly they offered a $2,000 game. And it just attracted gamblers. Pot limit Omaha is kind of a fun game, right? It's a game where it's like easy to get the money in. It's very easy for people to wildly misunderstand how to play. And I wasn't great, but I was like, I think it was maybe just a little, it was somewhat natural to me how to take advantage of these ultra loose players. So you're four tabling. And then what happened was by the end of the summer, exactly what you think would happen happened, which was like in the beginning, there were no professionals. Like I would sit down and there was no one at the table I had to worry about. By the end of the summer, I would recognize world-class pros sitting at my table. And the worst fish, they went broke, of course, right? Like there's only like you're sitting at that table, like you're just gonna lose money fast if you have no idea what you're doing. If I'm making $1,000 an hour, someone's losing it. There aren't that many people to lose that much money. So by the end of the summer, it was like, okay, I'm now the average guy at this table. Whereas in the beginning, it was like, it's 8 people who have no idea what they're doing and one other guy who's like a semi-pro like me. And I say semi-pro very humbly, So the key lesson that I took from that was, one, these things don't last. And I knew that at the time, but I didn't take advantage. I was playing 4 hours a day and my parents would be like, oh, if it's that profitable, why aren't you playing more? And I was like, because I don't need to, which was like the dumbest thing to say. What I should have done was play 18 hours a day. And then when it gets crappy, go on vacation. Right? It's the opposite. So traders do this all the time. Traders, when things are good, they trade with low risk, with low leverage, with low stress, and they trade for a few hours because they're like, I don't need to. If I want to make my $500,000 a year, $1 million a year, whatever, I can do that without leverage, with less risk. As things get tougher and tougher, they start levering up more and more, which is the opposite of what they should do. Basically, as the Sharpe ratio gets lower, they take more risk because they have to make their 250 grand a year or whatever it is, right? And the key lesson I took away is you do the opposite. When the Sharpe ratio gets really, really bad, you just stop. When the Sharpe ratio is amazing, that's when you work the 18-hour days, and that's when you use leverage and take advantage. So heading into crypto, it felt the same to me end of 2016. I was like, this is like 2003 in poker. I feel it. I see what's happening. I'm going all in. I'm not going to sleep. Like I am working 18-hour days every day of the week until this is over. Like and it doesn't just end. It's a gradual thing, but. And I think, and by the way, so like Q4 was kind of like one highlight of that, but we're nowhere near over. Like this is, 30 million people in the entire world own cryptocurrency. This is maybe like 2003 in poker. We're nowhere near that 2005 or 6 kind of high point.
Well, that's very interesting because as you were talking about poker, I was like, this is starting to sound a lot like what you did with crypto.
And the same mentality of like, the one thing that I kind of pat myself on the back on that we've done well is seeing an opportunity and going all in. And all in this case doesn't mean financially, although that's an element, but all in mentally, time-wise. Like I only joined Twitter March of last year. Like we launched this firm 1 year ago, almost to the day. So it was almost impossible to do, this sounds like obnoxious to say, like this pace at which my co-founder and then our team has moved is insane. And it literally meant like my co-founder and I almost never being in the same room, almost never. It was like he was working 18, 19-hour days and I was working 18, 19-hour days, and they were in parallel because like that was how fast we were trying to move. So it's the equivalent of like you're at this ultra juicy game and like the fish are hemorrhaging money. You're like, I need to get every cent here because this is like, this is it. And this game might not meet tomorrow, So I've taken that mindset. I still have that mindset. I don't know how long ago. I think it's a few years, and then things will start getting kind of like what happened after 2006, which is there's still professionals like yourself. Like I could probably, assuming I put another year and got back into it, I could probably be a pro player today, making a living, but not I couldn't be a top 20 player. I don't think I could be top 100, but like I could make a living at it, but it wouldn't be great. It wouldn't be like 2004. Same will be true in crypto right now. If you're an average person watching this, you can make a lot of money in crypto if you put in the time, you do the diligence, you do the one thing more than everyone else is doing. So you visit the team, you actually, they're claiming this person's an advisor, reach out to the advisor and confirm it. That one little extra step means you're in top decile projects. Like that's all it takes. Like you can eliminate the bottom 90% of ICOs by just looking at the list of names on the list of advisors, team members, and reaching out to each one and having a 10-minute conversation. Bam, you're now a top decile investor in crypto. In 5 years, that won't be true. In 5 years, every professional, it'll be professional money doing what professional money does.
Very interesting stuff. And it looks like you guys got some good tips here to try and improve your game. So I've got a question here about a bet that two guys I know made at the start of this year. Okay. So we're in absolute mania phase. Market cap is 756 billion. Those were the days. But anyway, this is the bet that was made. The guy got one of the guys got 10-1 that the market cap would not go under 100 billion in 2018. So essentially, he gave 10-1. If it goes under, he loses 10. If it stays above, he wins 1. And then the other guy is betting that it will go under. Right. Whose side do you like at the start of that bet, and whose side would you like now? These are poker players, by the way, obviously. But anyway, carry on.
Yeah. I think I probably would have been. It's funny doing the edge. So I was an options trader, so these kinds of things are like exactly what you do as an options trader. You think about at like the distribution at the tails. It's still very hard to do in your head. Like it's like the intuition behind it. It's like it's really hard to like. It's very easy for me to give you answers on this, and you would ask me another set of questions, and I give you answers, and then you would be like, "Ari, you're an idiot. They contradict each other," and I can prove it, and you'd be right. Like it's very hard to. So I think I would prefer to have bet that we wouldn't go under 100 billion when we were at the highs of December. I probably would have laid the 10-1 on that, or I might have preferred that side, but that actually sounds not that far from fair to me. It wouldn't have been that far from like the market I would have made around, I think. Right now, I would definitely rather be betting. I would rather get the 10-1 that will go under. And that's just updating for new information. So time has passed. Like, what are the two variables, right? So time's passed. There's less time to sell off, but we've sold off a lot, right?
What do you think at this point, if you had to gauge, like, do you think it's 25% to go under? Do you think it's 20% to go under? Do you think that we've seen the worst of it? Do you think that there's still, it could be more like 50%? What are your thoughts as to right now?
What is it right now? I actually just pulled up.
I think it's at like, I have not checked over the last 2 hours, so it could be anything, but I think it was at like
217. 217.
Oh, we're rallying. Ari, we're rallying.
Yes.
217. Nice.
I think you and I get credit for that.
Yeah, that was us. That was definitely us.
Definitely us. Let's see. By the end of the year that we fall 55%, I'd probably be something like, so, okay, there's the option trader answer, and then there's my biased answer. So I'm definitely a bit of a permeable. I'm definitely a little biased in that direction. So like my intuitive answer is something like 20%. My option trader answer is something like, I'm probably 25 bid at 45%. So I'd probably be 35% that it happens. Okay. And mostly that reflects, so like there was a prediction I made. I did a list of predictions early January, and my first one was Bitcoin will trade. This was when Bitcoin was at around 17,000. I said Bitcoin will trade at both 6,000 and 60,000 in 2018. And then like 3 weeks later, Bitcoin was at 6,000, down from 17,000. And I had people be like, Ari, you're a psychic. And I was like, no. First off, I got half of one prediction right. First off, let's be real here. I got half of one prediction right. Second, I really did not intend that to be a point prediction. My point was, I expect Bitcoin to remain super volatile. My point was, this is a hyper volatile asset, and people always underestimate how volatile this can be. And if it's volatile for fundamental reasons, and so in other words, you should not be surprised if it sells off 70% or rallies another 3x, very fast.
It's also very easy to get half of that right, because you're predicting either a big upswing or a big downturn over the year. So it's like, totally. It's one of those things where you're going to be right with half of it, like 80 or 90% of the time, but both like is much lower. So yeah, that's funny.
Totally. And I didn't put that much thought into the wording because it wasn't a bet. It wasn't meant. It was like literally in my head. It was, I want to convey to people that I think Bitcoin is going to be volatile in both directions and be very volatile. And they should in their mind say anything is possible, because like that, like one of the, I try to be a bit of a voice of prudence and kind of reason in the community. Both that I mean, the people I serve are very different from the people I'm tweeting to, in the sense as a investment firm. I'm not, so when I'm tweeting something like that, the purpose is basically, I don't want the people following me to make stupid mistakes. And an easy way to be stupid is you're overconfident in the narrowness of what can happen, and therefore you lose leverage, you risk more than you can afford to lose. So my point was, guys, anything can happen. Expect that wild swings can happen, and be prepared for that, whatever that means for you. So probably don't use leverage. Probably don't have half your net worth in crypto. Probably don't also be careful shorting. I mean, because anything's
Definitely be careful shorting. I like that you use voice of reason, by the way, because I always, when I introduce people, I try to think of what I'm going to say, and I picked voice of reason as like my intro for you, and then I didn't run that by you, and apparently that was a good fit then. Because when I see you tweet, you always you have a very grounded approach when I listen, whenever I read your tweets, it comes across as very clear and concise and well thought. And you put a lot of effort into what you have to say because you care about it, and that comes across to me, at least when I read a lot of what you write.
Well, thank you. But part of it is genuine lack of understanding or knowledge, and I like, in the sense that I don't have that many very strong convictions. I'm not going to be tweeting Ethereum is going to conquer the world. I'm certain of it. Right? I'm not like contrasting myself with some of your previous experts, air quotes. So I some of the people I really like, others I'm kind of neutral towards, but regardless, these are maybe very smart people, and they may be experts in that they may know way more about Bitcoin than 99% of the world. But in no way are they experts in telling you that Bitcoin is going to win, because they're not like if someone told me there was a fun guy I had a Twitter feud with who was a great contrarian indicator in like December. So there's a guy, I'll name him. So I don't even know who he is, but a Twitter handle, Parabolic Trav.
I think I've heard of this before, actually.
Yeah. So what was amazing was, out of nowhere in early December, this guy who I'd never seen on Twitter before suddenly had like 80,000 followers. And all he did was every single day tweet charts showing that Bitcoin was inevitably on this parabolic path that would take it to $100,000. And he was, and he billed himself as a financial advisor, and then had a Petroleum account where he was asking for money. And he billed him, and he wrote, I think he had actually had a financial advisor background. So what kind of annoyed me was, here's a guy, like, I'm one of the few people with a financial background who's very active on Twitter. And I try to be very responsible with that. Don't invest more you can afford to lose. Nothing's inevitable. No one knows anything. So I try to like that's kind of what you're supposed to do as a financial advisor, right? And he is kind of billing himself in the same way as, trust me, I'm a financial advisor, and then telling people to do the opposite. So he and I had this debate where he said, it is mathematically impossible for Bitcoin not to win. And I said, are you like kidding me? Like, what the hell? What are you saying? Like, what does that mean? And he goes, it's sound money. You have to study Hayek. It's foundational economics. It's like, no, Bitcoin is like, have you examined Bitmain's chips? Like, do you know there are no backdoors in there? Are you a world-class game theory expert who knows about consensus mechanisms as yet uninvented? Are you like, there's so many, are you a world-class cryptographer who can be certain that SHA-256 will never break? Are you an expert on quantum computing? There's so many variables here that there's no way, like, no one on your show is an expert who can tell someone what cryptocurrency is going to win. I don't know if there's anyone in the world, there's no one in the world who has all the relevant expertise. If I joke, I've tweeted that a few times. There's no one in the world who really is an expert on crypto, because there's all these different fields. And a few times people responded back with Nick Szabo, and I kind of concede the point. So if Nick Szabo wants to tell me that like I'm actually a crypto expert, like, yes, you are, Nick. And for those of you who are listening who don't know, Nick Szabo invented the term smart contract, created BitGold, which is a precursor to Bitcoin, has a wonderful blog called unenumerated.blogspot.com. I don't agree with everything Nick says, but he's a brilliant guy who is a engineer, computer scientist, lawyer, game theorist, economist.
One of the original cypherpunks, right?
Yeah. He invented one of the things that was a precursor to Bitcoin. A lot of people a few years ago thought he was Satoshi. He's always said he isn't. I'm pretty sure he's not. But that, in fact, there was a really funny, he went on like CNBC once, and it said, Nick Szabo, not Satoshi Nakamoto. And people were joking, he's so Satoshi that you have to say he's not Satoshi, because that's how freaking Satoshi the guy is, right? So so I'm a big fan, and he's like one of the only people who legitimately can say they have they have enough breadth of knowledge to actually offer a expert opinion on crypto generally.
We also know that Craig Wright is Satoshi, so there's no point even asking Nick. I mean, it's clear. Craig says it. You've seen Craig say this, right?
I have seen Craig say it. Yes.
So there you have it. Why wouldn't he be?
There you have it. It's funny how contentious that question still is. If you talk to the Bitcoin core devs or OGs or whatever, they really don't like talking about who Satoshi is. Partly they're afraid for people's families. So the speculation can be dangerous. When people speculate that one of the early OGs might be, and I gotta say, I've been pleasantly surprised. There haven't been that many horror stories in our industry. I mean, there's SIM swapping, right? There's stories of people losing their money because someone hacks their AT&T or whatever. There was just Michael Turpin just filed a lawsuit against AT&T for $224 million because an insider at AT&T. I don't know exactly what they did, but took advantage of his SIM card for 2FA and was able to steal $24 million or so from Michael Turpin. So the point is like, okay, that happens. There aren't that many kidnappings. It's really scary, right? Like crypto is the easiest thing in the world to steal. It's a massive target for smart attackers of all types. It's one of the very few assets where if you know someone has $500 million, you might actually be able to steal it, right? Physically. So very, very scary.
No,
so I can understand the crypto OGs who, you know, are like really careful about that.
So it is scary stuff, but here's my counter to that, which is think about all of the very rich, successful people who undoubtedly, if you kidnapped a family member or and look, like this is not stuff that I like want to talk about, but I do think it is important to address these issues because this is something that is real. Think about all of the famous people in the world who, like, if you kidnapped a family member or, you know, you robbed them or held them hostage or whatever it is where you could get a lot of value. Think about how many people there are that would be vulnerable to that. And then think about how much it happens in our society. And I think the reason that it mainly doesn't happen is because most people, the vast majority of people, are good people. And so, yes, cryptocurrency does make it easier for thieves in some of these scenarios. And you should absolutely be safe with a lot of it. In fact, I don't even have access to a lot of my Bitcoin. I just keep it in safety deposit boxes because I don't even want to have the access to it. But the point is, like, prepare, but also realize that you shouldn't live in fear because most people are good people. And just because, you know, now that it's a little easier to steal, it doesn't mean all of a sudden the world's going to go crazy. Now, I don't want to say that it won't specifically go crazy, I guess, but you know, there are a lot of famous people out there. There's a lot of people out there that are vulnerable to this, and it hasn't been happening. Why? Because there's not infinite numbers of terrible people that are trying to rob and steal. That's my main point that I would like to make.
I agree. I half agree. So there is a one thing that plays to our benefit is there aren't that many really smart criminals, which sounds like a stupid statement because there are enough out there. But I talked to some of the bodyguards of some of the like crypto billionaires, and I happened to run into them I was at a great event that had a bunch of crypto billionaires, and they all had their own like personal security. And I was like sitting at a table, and I was just like talking to the bodyguard for like an hour. And it was just like really interesting to hearing like how they think about it. And
that's cool. That's actually a really cool experience, like getting to get that viewpoint.
Yeah, it was very cool. I didn't know who he was when we started talking, and I'm like, wait, you're not in crypto, are you? He's like, and he's like, no, I'm a bodyguard for this guy. And I'm like, oh, very, you know, I was like kind of excited because I've been talking to only crypto people for like a weekend, and it's like, oh, like great, awesome. So
normal people.
Normal. Well, I don't know, bodyguards normal, at least more normal than a lot of more normal. Yeah. You can't get weirder than a crypto billionaire. You can't really get weirder than that.
That's
but, and one of the comments they made was, you know, criminals look for easy targets. There aren't that many criminals who understand crypto. But there are some. I think, look, here's a huge difference. If you were to kidnap a traditional billionaire or ransom a family member, it's really hard to get away with stealing fiat. So wire transfers are traceable. It's not easy to get away. So if that billionaire sends you $20 million in unmarked bills in a briefcase, it's hard to collect it and be confident you're going to get away with it. It's hard if they wire it to an Estonian bank. It's hard to launder the money. It's hard to be confident. It's actually really, really hard to steal, even if someone gives it to you. It's hard to get away with improperly receiving $100 million. Not impossible, but it's hard. Whereas if a billionaire has like $100 million sitting in a ledger and he transfers it to an address and you're able to physically get away, you've done it. Probably, if you know what you're doing, if you know how to mix coins or whatever. So I actually think that difference of, I can tell you, this is a huge concern for anyone. This is one of the big reasons that institutions are not in crypto. Like custody is such a big focus because imagine if you're running a traditional trading firm, you can have a whole bunch of traders trading your money. And the traders can damage you. So they could, for example, deliberately lose money, but they can't steal it because they can't. When I was trading in Susquehanna International Group, I'm trading crude oil futures. I can't steal crude oil. I would have to take physical delivery. There's no way I would get away with it. Like there's no way. And you can't, there's no way for me to wire money. So I have to contact operations. They wire money to an exchange. Like there's no way for me to slip my bank account in there. And even if I did, I would get caught retroactively, right? I have to live in hiding. In crypto today, though, you know, let's say Bitcoin gets sent from your trading address, running a trading firm, to some address you've never seen. And you can even prove that one of your traders did it. And the trader says, I have no idea what happened. Must have been a bug, a virus, a man-in-the-middle attack. I have no, at some point when I copied and pasted, the address must have been changed. I'm sorry. I don't know what happened. You're unlikely to ever prove what happened, which means that person can at least hope they can get away with it, which makes it a much more attractive theft. So that is a huge pain point.
Yeah, but you know what the thing is? That person has to be held responsible for the funds that they have access to. There's no other way to go about it. If you copied and pasted an address in and like it was the wrong one and it went to a random address. Like you have to take some responsibility, man. Like that's part of your job.
So you'd fire the person, but the point is they don't necessarily go to jail because you can't prove criminal activity. And the person might at least hope that that is true. They can at least hope. And even if you can put them in jail for it, you still don't know where the money is and you can't recover it. And it's just sitting at some address that's never been used before for who knows when. So, and there's a huge difference between people are not afraid of being fired if they can steal $50 million, right? They're afraid of going to jail for life. Now, all of this is going to be fixed. So there's a ton of custodial solutions in the works. Some are geared towards high net worth individuals. Some are geared towards institutions. So I think in a year, you would be comfortable, instead of using a safety deposit box, using a third-party service that has insurance on it. It would feel very, very similar to trusting a bank. And with the right,
that's what we all got into this for. More banks.
So I am a believer in the initial cypherpunk vision of let me put it this way. I think people should have the option. So if you want to have some of your assets in a way that you can't touch and you can publicly broadcast that, you should have the option. And if you want to totally own your private key, you should have the option. So totally agree. If you don't have your private key, it's not your Bitcoin. That's very true. Well, actually, no. I take a step back. There are solutions that are best of both worlds. So here's an example of a solution. We shard your key. You have a hardware wallet. 3 other people you trust have a hardware wallet, and maybe some legal authority, if you can choose or not to include that legal authority in the hardware wallet. So if someone kidnaps you, and you can build in time delays, you can build in a 6-month delay, you can build in, you can kind of build anything you want to do in terms of what it will take to transfer a Bitcoin, you can do. So you could make it, I'm trying to think of like specific examples that would make this useful. But the point is, you can have your Bitcoin stored in such a way that even if you're kidnapped, you can't transfer it, and yet you're not trusting anyone you don't want to trust.
Right. That makes sense. All right, so we've already kind of run over the normal amount of time that we go for. Ari, are there any last words you want to, any advice you want to give to the audience? Anything you want to talk about? If you want to talk about what you're up to lately, where people can find you, anything that you're doing, man? I want to say thanks for coming on the pod.
Oh, well, thank you. I don't do much, as I said, kind of all in, mostly just working. But on Twitter, I'm at Ari David Paul. Feel free to tell me why I'm an idiot. And I mean that literally. I actually, that's how I learn. So I say a lot of stuff. Some of it's wrong. And people, fortunately, having a lot of followers on Twitter means if I say something wrong, it will instantly be corrected, usually by 30 people, which is great. Thank you so much for having me. Here's my one comment that I would say to people to encourage them. If you're staring at markets all day and you're passionate about crypto, don't give up that passion. Redirect it towards something more fundamental. So go to local meetups, talk to developers, get your hands dirty. If you can join, even part-time, join a team, whether it's building, you don't have to be a developer. So maybe it's joining UI, maybe it's joining in a biz dev role. And if you don't want to join, that's fine too. So for example, like I'm looking at crypto games, I could stare at price tickers all day, or I can actually play the games. Go play the games. Go download Augur and make a bet on Augur for $50. You might lose it, right? Augur. I'm not telling you Augur's safe or secure, but that's how you get to know Augur and get to know Ethereum and get to know, actually like run a node, run a Monero node, run a whatever node.
Awesome. Great advice. All right. Well, I want to say thank you to Ari for joining the podcast today. I want to say thank you to you guys for joining the podcast today. We've had a lot. I've been doing 2 podcasts a week for a couple of weeks now. The podcast will be taking next week off, and we're currently scheduling some guests. We're looking to be back in 2 weeks, so you guys can stop by then. If you're new to the channel, make sure to hit that subscribe button, and I'll see you again soon.